Hello and welcome to the special coverage of TCS's Q1 FY22 earnings. They will be ringing in the earnings season for India Inc. and TCS's initial numbers, going by what we have, appear to be slightly lower than what the street was anticipating. It's a rupee revenue growth of 3.9% on a quarter-on-quarter basis. Margins have fallen by 130 basis points, just about a 20 basis points lower than the Cnbc TV18 poll. So EBIT margins for TCS have come in at 25.5%. A margin decline, remember, was expected due to a full quarter impact of the wage hike. TCS has given all its employees the second wage hike in a span of 6 months. Because the wage cycle has been normalized, there was expected to be some pressure on the margin, and that is getting reflected. So margins quarter on quarter have fallen by 130 basis points. The profits have also consequently declined by 2.5% and come in at about 9,008 crore. What we do not have right now is the dollar revenue growth, where the expectation was that it will be a growth at close to about 3.6%. Some more numbers that we have. The headcount addition has been strong for yet another quarter. It's come in at 20,409. This is at an all-time high. In fact, even in the previous quarter, the company's employee addition was solid at more than 19,000. And this quarter, they've continued with the hiring momentum. So record hiring seen this quarter. The TCV, that's the total contract value, the deal wins that the company has won, which is new as well as the renewal, has come in at $8.1 billion. This is lower than what they had in the prior quarter, which is $9.2 billion. But usually there is that amount of variability that you see in the deal wins. In fact, if you look at the average deal wins over the last 6 quarters, it is close to that $8 billion mark, which means the deal wins at $8.1 billion this quarter is largely similar to the 6-quarter average. So that should be read in line. The internals of the deal win should be read as follows. In BFSI, that's the banking financial services vertical, deal wins stand at $2.1 billion, retail at $1.5 billion, and North America has come in at $4 billion. The company continues to maintain that FY22 will be better than FY21, but that is on expected lines because FY21 had that impact of the pandemic where Q1 numbers were sharply lower, and so that is on the expected lines. Let me just try and get what the dollar revenue numbers are, if you have them flashing for you on your screen, and the constant currency revenue growth. So I think I'm just waiting for that number, which will be flashed anytime now. But prima facie, these look like a good set of earnings, a minor miss on margins as well as profitability, but more than made up when you look at the internals like the employee addition as well as the deal wins, which continue to be maintained at a strong run rate. Again, I'm still waiting for some more color on what the dollar revenue as well as the constant currency revenue growth has been, this time on a quarter-on-quarter basis. In moments from now, we will be getting in our experts to try and get some more color on what the numbers is. Just reading out the statements from the top management. Rajesh Gopinathan, the CEO and Managing Director, says, and I quote, "I am humbled that in a personally challenging quarter to many, TCSers have demonstrated phenomenal character in helping each other out, been meaningful to the communities and delivered on commitments to clients. On that backdrop, our business in North America, BFSI and retail have shown appreciable growth, which underlines the resilience of our operating model, relevance of our offerings, and above all, the passion and dedication of our associates. Given the variants of virus and the fears of a potential third wave, we are watchful of the emerging situation and remain optimistic of the opportunities in our core market and verticals. We are well positioned and operating diligently to participate in them aggressively." N. Ganapati Subramaniam, the Chief Operating Officer and the Executive Director at TCS, says, "We overcame the challenges posed by the second COVID wave in India in taking some practical approaches, and I'm satisfied that the delivery of all our client engagements was kept on track. We once again had a superior quarter with deal wins of $8.1 billion, which is broad-based across markets as well as verticals. Our growth and transformation teams are seeing traction in the marketplace, and we are delighted to sign the largest ever SaaS, that's software as a service deal, with a global banking platform on cloud during the quarter. Samir Suksaria, who is the new CFO of the company, he's just taken charge, and this would be the first time he will be speaking at the press conference, which will start in about 10 minutes from now. They've said that we have crossed the $6 billion milestone in quarterly revenues. In addition, our annual salary increases and promotions, we've taken one of the largest vaccination drives in private sector. Despite the headwinds in regional market, we've expanded our Q1 operating margin on a year-on-year basis. So these are some statements which are coming out from the top management. While we get some more details on the numbers, let's invite the experts that we've lined up for you to react to the numbers. Prakash Diwan is with us. Prakash, these are the numbers that I have for you. Margins lower by 130 basis points, profits down 2.5% on a quarter-on-quarter basis, but internals like the deal wins at $8.1 billion and the employee addition appear to be on the higher side. Okay, by the way, the dollar revenue growth has missed expectations. Dollar revenue growth has come in at 2.8% versus consensus expectations of 3.5%. So there is a miss in the dollar revenue. So that is an important internal. Dollar revenue has fallen. Secondly, the attrition has come in at 8.6%. This is sharply higher than 7.2% that TCS had in the prior quarter, which means that the labor market tightness has started to reflect in TCS. At 8.6%, it will still be the lowest in the industry. But this is symptomatic of what we should expect from the rest of the industry as well. Now TCS's numbers are looking a little more somber. There is a miss on the revenues, and this 140 basis points increase in the company's attrition is also a red flag for the industry. Prakash Diwan, as promised, is with us. Prakash, first, your thoughts on the numbers. And, given the stock positioning in the last 3 months, TCS has not moved anywhere. It was 3,250, when they came out with the Q4 numbers. It's still hovering around those levels. So in that context, how do you expect the street to read these numbers?
Yeah, hi, Rima. So thanks for having me on this edition. What the market possibly is going to read into is the tepid dollar revenue growth, and because that seems a bit off the mark given the kind of consensus of 3.6, 3.5 that was prevalent, people will say, see, we told you so. TCS was under a bit of stress. It's not been able to get pricing back into some of its contracts. So while that 8 billion mark seems very much on an even keel, it's at what price do you get these contracts renewed or new contracts signed up? That's the critical part. And let's face it, the cost of having your resources work on offshore contracts is going to be far more higher than what you thought. It's not easy to get talent there. You need to pay much higher than what you had penciled in, let's say, last year into your projections. And that labor market is suddenly kind of heating up. So I think the fact that they have talked about recruitment at such a high pace tells you that they are gearing up for this, and this is not something which is going to change. So people on the market, on the street, are very clear that TCS, being the bellwether, it's going to probably set the tone, set the tonality and the direction for all the large cap IT names, where you'll probably start living with higher revenue growth on a constant currency basis, possibly some verticals doing well, but margins could probably start getting a bit questionable. Now, whether the stock price captures all of that, I think in a flight to safety kind of a move that the market is now getting into, IT companies, the likes of TCS, notwithstanding some of this weakness in the numbers, will still offer very good bets because it's a great secular story, right? It's not just a quarter that you get worried about, but the next year, 2 years cycle seems so positive that I don't see any reason why the market will not kind of take this in its stride and move on. Because this is much more insulated from a lot of other businesses. So yes, I do agree on a Q&Q basis. On the semantics, it does look a bit off, but the market will probably not continue giving it such a sorry treatment as compared to, let's say, an Infosys in the last 3 to 4 months that it has. But it will probably start marching ahead on a more longer term, long only portfolios.
I think there has been an impact of the second COVID wave. Now, constant currency revenue growth for the company has come in at 2.4%. But this regional market for the company has actually declined, which is why the company has given the constant currency growth ex rest of the regional market, which has gone up by 4.1%. And also, if you read, just again, just reading between just trying to, make some sense of what Rajesh Gopinathan has said, there is a lot of talk about this variant of virus, the fears of a potential third wave. He said we are watchful of the emerging market situation. So I think there is a bit of caution which is seeped into the management commentary. Again, it's too early to read the tea leaves. We will have Rajesh Gopinathan and NGS addressing the press in just 5 minutes from now. But the problem for TCS, or the miss in TCS's revenue growth this time, has come in from the regional market, and that could be on the back of this COVID second wave. And again, as I said, if you read the management commentary from what they said, they are watchful of the emerging market situation, considering that there is a possibility of a third wave. So TCS, for those of you who've just tuned in right now, TCS's Q1 numbers has disappointed the street in terms of the top line performance. The dollar revenue has gone up by 2.8%, lower than consensus expectations of 3.5%. The constant currency revenue growth at 2.4% is also a miss. This is usually a strong quarter for the company given the seasonality, but at 2.4%, it's lower than expectation. Margins have fallen by 130 basis points. And the problem for the company is the regional market. In the internals, the deal wins are strong. The employee addition is strong. But the employee addition has to be seen in context of the rising attrition, where attrition has gone up by 140 basis points to 8.6%. Suyog of Rellaince Securities is also with us. Suyog, your thoughts on the numbers? What have you made of the internals? Have you had a look at what the individual verticals, the geographical breakup has been, and what, according to you, is the reason for the miss?
Clearly, the revenue growth are below our expectation, and regional markets and others have impacted the revenue growth. But the good part is here, the growth in the order book remains strong. Order book at 8 billion remains strong. So that provides, we believe, a good visibility around annual revenue growth rate. And verticals, if you see the growth pattern that we have seen before, life sciences and healthcare vertical has done well. Manufacturing has shown a decent growth, and the BFSI vertical has shown a decent growth. This regional vertical need to be watched. It's probably the impact of the COVID wave, but on an annual number, we are quite confident considering the deal wins that companies are getting.
Okay, so you're positive on the deal wins, but just over the near term about the way the stock is likely to react, till Infosys comes out with its earnings, and I think the date is 14th or 15th of, sometime in the middle of next week, TCS will be the only data points that we have. So how do you expect the stock to react?
So on the near term, I feel that there might be some pressure on the stock, but if you see the medium term view on the stock, that we are having a 2-year view on the stock, the revenue resiliency remains strong, and margin performance is up to our expectations. Attrition level is also companies seems to be in the command. So I don't feel like some correction. I don't feel a major correction, and that's what we feel.
Okay, so you don't expect a major correction. If you look at the stock positioning in the run-up to the earnings, TCS has underperformed in Infosys by nearly 10% in the last 3 months. So in the last 3 months, TCS performance has been flat, but we have seen incremental buying come through in Infosys, because of which Infosys has outperformed. But the data point which is relevant for the rest of the industry is the increase in attrition as well as the strong deal wins. I think these are the two numbers and the trend which will get replicated across the rest of the pack. Ashish Das is also with us. Ashish, I've not had a chance to look at how the individual verticals have been. Anything that stands out for you in terms of the client metrics, in terms of the internals?
You see, I have not looked at the client's metrics yet, but the thing is, yes, the deal wins is strong, and revenue is missing our estimates, and margin it's declined 130 bips despite full quarter of wage revision. So I think TCS has done well in margin front, and deal wins remain strong, and other verticals also broad-based growth you can see except the regional segment. So that would have impacted also the margin some extent. So overall, I believe revenue missed, but internals like broad-based growth in most of the verticals, and also the deal wins remain strong.
I'm trying to see if anywhere I can read whether they've reiterated that double-digit revenue growth for FY22, something that they'd spoken about in the prior quarters interaction. So I'm just trying to see if I can't read it yet. So that is something that the street will watch closely in the press conference, that whether the company reiterates its guidance of doing a double-digit revenue growth in FY22, or there is some caution which is going to seep in light of the COVID second wave and the minor miss that we've seen in Q1 performance. Ashish, in terms of management commentary, what would be the top 3 things that you will track?
Definitely the demand outlook and what they are saying about the regional, the performance of the regional market. Definitely the demand outlook and what they are saying about the regional, the performance of the regional market, and the margin outlook also to be looked at, because war of talent everyone is talking about, but war for talent is talking about. But the thing is, TCS is well prepared. My view is TCS is well prepared to manage war for talent, and they have good HR practices, and they do timely recruitment. And the attrition, you can see that it is lowest in the industry. So one, deal wins, demand trajectory, and margin trajectory, and also as you mentioned, what they are giving the growth outlook, double-digit growth, they are going to maintain that commentary or not.
Suyog, same question to you. Any more thoughts on the numbers, and what would be the top things to track that you want to hear from the management?
Yeah, so basically the demand outlook, the more granularity of the what's happening with the regional markets. Secondly, information about the large deal and the medium-sized deal closing. Any commentary on that? Vertical outlook on BFSI, healthcare services, which has done well for them. And lastly, the update on the attrition and the supply side, their concerns, if they are facing anything on in the India also, and their overseas markets also.
What, according to you, is the reason for the weakness in the regional markets? Because X of that, the company has done pretty well. Suyog?
So I feel there might be some impact of the second COVID wave, but I think the we need to look into the press conference and the management commentary, what they say about the miss in the regional market and other segments.
Okay, so according to you, it's possibly the COVID second wave. Ashish, would that be just a one-quarter impact, or do you expect, if the reason is COVID, will that be a lingering impact on the regional markets, say for the coming 1 or 2 quarters?
See, if it is COVID too, they are mentioning, the COVID impact was high in April and May, but it recovered, the market in India, regional market has recovered in June. So I don't think if you also look at ISG call yesterday, they said that India has not, the delivery has not impacted so much. So I don't think this is the best company and best execution capability, they can manage it. So it would not be much impact going ahead.
So your bet is that this is a one-quarter blip in terms of if there was a COVID impact on the numbers because of execution.
That is my answer. Yes.
Prakash, what is the read? That would be your guess right now. We'll wait for more clarity. Prakash, what would be your read-through from the TCS numbers for the rest of the large cap pack?
So, Rima, if you look at the kind of growth that they've clocked in North America, and particularly in the life science and retail and the manufacturing verticals, all of them seem to be on a Q&Q basis as well quite healthy. I'm not comparing the YOY thing because it's a bit unfair. Last year quarter was a washout. But having said that, the key measurable for everybody going forward is going to be the attrition rate. I think today this entire wave of digitization, which most of the new contracts are coming in for, is something which is challenged by the shortage or by the potential shortage of talent. And if TCS were to say that they have seen increase in attrition and they are still the lowest in the industry, means that the impact is going to be felt by others in a much more serious way. And remember one thing, these days digitization contracts are more of pay as you go, and there's nothing which is very upfront when you sign up. And that's one of the reasons why if in the month of April and May, if your people were not in a position to deliver on some of the timelines, turnarounds, it is going to impact revenue, right? The booking of revenue is going to get deferred. But the next quarter will probably see much of it catching up. So if I had to monitor two things, it's going to be what is it in terms of share, the percentage of new wins that's going to continue for the whole year, what's the nature of those contracts, and of course, as I said earlier, the attrition rate and how you're managing to plug that. I mean, some of the companies have already demonstrated, and this price hike, the wage hike was meant to mitigate that. But is that enough, or are you going to still be in a position to do another wage hike somewhere in the middle of the year, maybe post-October or something? So that's going to be the key measurable, because the cost factor is changing quite dramatically faster than what we thought.
Absolutely. I take your point completely. If TCS has seen this kind of attrition increase of 140 basis points, and this is a company which has been doing timely hiring, timely wage hikes. They were the first to give a wage hike last year in the pandemic year, and in a span of 6 months, they've given their second wage hike. They have been investing in people, in training. A lot of their employees, I can't remember the number, but are digitally trained, and they keep track of that, and they give you that number every quarter. So if a company like TCS, which has made such an investment in the training as well as has been consistently rewarding their employees, has seen an increase in attrition, then my fear is that the rest of the pack is going to see a more of an exaggerated impact compared to TCS, and that is going to be an important monitorable to track. That said, demand continues to be strong, as witnessed, as evident by the company's deal wins, which continues to be at a strong quarterly run rate at $8.1 billion. Remember, TCS's deal wins are a combination of renewals as well as new deal wins, and that breakup is not known. But an $8 billion revenue quarterly run rate is a strong number. It's in line with what we've seen over the last few quarters. Small aberrations are always going to be possible. So yes, this quarter there has been a revenue miss, and the stock is likely to react to that. The EPS numbers get adjusted, and that could be maybe because of some execution issues. There may have been some issues in the regional market which has underperformed. X of that, TCS's operational numbers actually look very strong. And life science is turning out to be a very strong pocket for them. I think it's just close to about 10% of their overall revenues. But this quarter, it's seen a 7.3% increase. In the prior quarter, it was close to 19-20%. In the quarter before that, in fact, for the last 3 or 4 quarters, their life sciences growth has been in this 15%, 16, 17% odd quarterly improvement. So that is a pocket which is firing for them. So this quarter, TCS has missed expectations. But just going by the hiring numbers as well as the deal wins, I guess this, the company is, confident about the opportunity, this growth and transformation opportunity that they see, and they are positioned for that. Here's what we'll do. We'll slip into a very short break. When we come back, we'll have our experts still with us, and then perhaps we'll have the management as well addressing the press. Stay with us.